Anish from BlackBull Markets. Behind me the chart of the euro dollar currently sitting on a key support area as we approach today's ECB meeting. Now, a lot of investors are focusing on Christine Lagarde's tone of voice and her language that's used previously. It's been a lot of dovish discussions with Lagarde, who hasn't quite met the 2% inflation target in Europe, unlike the US, who are far exceeding that at close to 5% inflation and looking to tapering back bond buying. Europe potentially could extend bond buying, creating that divergence again in interest rate policies between the euro and the USD, as per the infamous, of course, couple years ago where we saw the 104s and discussions of parity. We could very well see a similar tone here with bears piling back into the euro against the dollar. Previously, of course, we've seen both interest rates stable. However, expectations for perhaps a dollar increase and the euro to stay at zero could create a bearish wave into the euro dollar, bringing it back towards 116, potentially 110 in the long term. However, what we have here is an interesting aspect showing how the crossover initially in mid-June 2020 formed that start of the bullish wave from 110s all the way up to the 122 highs. Ever since then, of course, throughout the year, the dollar has remained to the weaker side. Now we're beginning to see some demand shift back into the US dollar as the Fed have a bit more confirmation around the rate hikes heading into the next couple of years. Attention, therefore, for the technical side of this trade does turn to this support area that's formed on this mini trend line from the low that we saw in September at 116 all the way to current levels at 118. We did have an attempt at the crossover back at the latter stage of April, failed to cross over, instead headed up to the upside. We saw that move head back up to the 122 areas, back to a key resistance point from earlier on in the year. However, what we're now seeing is sort of a change in the trend, change in tone amid euro-dollar traders, where we potentially could see another cross form and a cross confirmation coupled with a break of this trend, therefore opens up the space down to this support area here, and that's at 116. It's a solid area of support as it's mapped with this double bottom structure from September and November 2020. Solid support, 116. Therefore, could definitely see a break of that line, opening up areas back towards that area. The fundamental play is on that side of the trade, so do keep your eyes on the ECB speech, because that could dictate the near-term trend. Of course, if we do get a complete shift in momentum to the bearish side, 116 as that support level could well be easily taken out. Then you've got areas below that around 113, and then below that to 110, where you enter into this trading zone from June 2020. On the flip side, if we do get a change of approach from Lagarde, who potentially could look at hiking rates, not sure the reason why. It's definitely the bias is not for her to hike rates, but to extend bond buying. But if for any change, if it turns into a hawkish speech, we could very well see that as a support area and bounce up towards the 118.50s, 119s. However, the side is on the bears on this trade, and let's see what happens, but we could well see 116 as a near-term target for the bears. All the best and happy trading.